Welcome back to the channel. I'm Algabot, and today we're studying an expert advisor for MetaTrader 5 called Sweep Rejection Reversal. This one is a little different from most of the strategies we review because it uses no traditional indicator at all. There are no moving averages, no oscillators, and nothing lagging behind price. Instead, every decision comes from the raw shape of the candles themselves. By the end of this video, you'll understand exactly how it reads a liquidity sweep, how it confirms a rejection candle, and how it places its stop and target. As always, this is educational information only and not financial advice. Let's start with the big picture of what Sweep Rejection Reversal is trying to do. This expert advisor is a pure price action reversal strategy. That means it studies the open, high, low, and close of each candle and nothing else. There are no indicator calculations under the hood, which makes its logic transparent and easy to follow once you understand the two ideas it combines. The first idea is a liquidity sweep. Markets tend to leave clusters of resting stop orders just below obvious support and just above obvious resistance. Sometimes price makes a quick move beyond one of those levels, reaches into that pool of orders, and then fails to continue. The second idea is the rejection candle, often called a pin bar. This is a candle with a long wick and a small body, showing that price was pushed firmly back to the other side of the level it just swept. When you put those two ideas together, you get what many traders describe as a failure of breakout reversal, where a move beyond a level does not hold and price snaps back. Because the strategy reads only candle geometry, it is fully timeframe agnostic. It runs on whatever chart period you select, whether that is a 15-minute chart, an hourly chart, or a daily chart. It can be applied to many instruments, including foreign exchange pairs, since the logic is the same everywhere price forms swings. This style of approach tends to appeal to traders who are interested in price action and who prefer patient, selective setups rather than constant activity. The expert advisor only takes one position at a time for its magic number, so it is not trying to be in the market all day. Of course, no approach removes risk. Trading always involves the possibility of loss, and this video is for educational purposes only. Now let's walk through the exact logic step by step. First, the strategy needs a level to work with. It looks back over a set number of prior bars, controlled by the Lookback parameter, which defaults to 12. Across that window, it finds the highest high and the lowest low. The highest high becomes the resistance level, and the lowest low becomes the support level. These are the swing extremes that the market may try to sweep. The expert advisor only studies the most recently completed bar. It evaluates that signal bar once, when the bar closes, so the decision does not repaint or change later. It also checks that no position is already open for its magic number, because it trades one position at a time. For a long setup, the strategy detects three conditions on that signal bar. First, the bar's low must dip below the prior support level, which is the sweep beneath support. Second, the bar must close back above that same support level, reclaiming it. Third, the candle must be a bullish rejection pin. That means the lower wick is at least the WickRatio fraction of the bar's total range, which defaults to 55%. The body is no larger than the body max ratio, which defaults to 40%, and the close is at or above the open. When all three line up, the EA signals a buy at the ask price. The short setup is the mirror image. The bar's high must poke above the prior resistance level. Then the bar must close back below it, and the candle must be a bearish rejection pin with a long upper wick and a small body. When those conditions align, the EA signals a sell at the bid price. Risk control comes directly from the trigger bar. For a long, the stop loss sits just below the swept low, pushed a little further by the stop buffer, which defaults to 10% of the range. The distance from entry to stop becomes the risk. The take profit is placed at the reward ratio multiple of that risk, which defaults to 2, giving a 2-to-1 target. The short side uses the same math in reverse, with the stop just above the swept high. Let's read through the code as it appears in MetaEditor. At the top are the input parameters. Lookback sets how many bars define the swing high and low. WickRatio and body max ratio shape what counts as a rejection pin, requiring a long wick and a small body. Stop buffer adds a little cushion beyond the swept wick. RewardRatio sets the target as a multiple of the stop distance, and lots is the trade size. Now look at the long block. Three Boolean checks must all be true. Swept low confirms the signal bar's low went below the prior support. Reclaim up confirms the close came back above that level. Bullpen confirms the lower wick is at least the wick ratio fraction of the range, the body is small, and the close is at or above the open. When all three are true, the code reads the ask price as the entry, sets the stop a little below the swept low, measures the risk, and then sets the take profit at the reward ratio multiple of that risk before calling trade.buy. The short block is the exact mirror. Swept high, reclaim down, and bear pin must all be true. Then the code reads the bid price, places the stop just above the swept high, measures the risk, projects the take profit, and calls trade.sell. Both sides share the same simple structure. Let's bring the whole idea to life on this chart, walking through a long trade first and then a short trade. Notice there is no indicator panel below price, because this strategy reads candles only. The two dashed lines are the levels that matter. The green line is the prior swing low, our support, sitting at 1.0830. The red line is the prior swing high, our resistance, at 1.0892. Watch the opening candles drift lower and settle right onto the support line at 1.0830. Price taps that green level a couple of times and holds, which tells us a meaningful pool of resting orders is likely sitting just beneath it. This is exactly the kind of level the strategy is built to watch. Now look at the sweep candle. Its lower wick stabs well below the green support line, reaching for the orders resting underneath. But notice what happens by the close. Price is pushed firmly back up and the candle closes back above support, leaving a long lower wick and a small body. That is a bullish rejection pin. All three of the long conditions are now satisfied. The low swept below support, the close reclaimed it, and the wick is at least 55% of the candle's range while the body stays under 40%. The buy entry marker fires on the next price, at the ask. The stop loss is tucked just below that swept wick, with the 10% buffer added for a little breathing room. The take profit sits at twice the risk distance, because the reward ratio defaults to 2-to-1. From here, follow the next few candles as price lifts away from support, building a steady climb. Each candle closes higher, and by the 8th candle price reaches the take profit target. The long idea has played out, and the position closes at the take profit marker. Now the market keeps pushing higher and begins to build a new structure into the red resistance line at 1.0892. Watch price press up to that level and stall just beneath it across the next couple of candles. The resistance at 1.0892 is holding, and a fresh pool of orders is now likely resting just above it. Here comes the mirror setup. The next candle's upper wick pokes above the red resistance line, reaching into those orders, but again the move fails. By the close, price has been pushed back below resistance, leaving a long upper wick and a small body. That is a bearish rejection pin. The three short conditions are met. The high swept above resistance, the close reclaimed below it, and the wick and body satisfy the pin filter. The sell entry marker fires at the bid. This time the stop loss sits just above the swept high, again with the buffer added, and the take profit projects downward at twice that risk. Follow the final candles as price rolls over and declines, candle after candle, until it reaches the lower take profit marker. The short idea has completed its run. So in one clean sequence you have seen both sides of sweep rejection reversal. A sweep below support with a bullish reclaim produced the long, and a sweep above resistance with a bearish reclaim produced the short. In both cases the stop and target came directly from the trigger bar. Remember, this is an illustration of the logic. Real markets are messy, setups can fail, and losses are a normal part of trading. That brings us to the end of our look at sweep rejection reversal. We covered how the strategy defines support and resistance from recent swings, how it detects a liquidity sweep beyond those levels, and how it confirms the reversal with a rejection pin that reclaims the level. We then read the MQL5 code for both the long and short sides, and walked a full chart example showing a buy and a sell from entry to target, with stops and profit targets drawn from each trigger bar. Remember that everything here is educational content only, and not financial advice or a recommendation. If you found this helpful, please like the video, leave a comment with strategies you'd like analyzed next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.